Matt Labozetta. If you've watched this channel and you've already purchased a property with me, you've most likely worked with Matt. So you already know what you're getting into. Matt is a senior loan officer, branch manager currently with Guild Mortgage. He is a local lender, and we can get into that later as far as why that's important and beneficial to buyers. This episode is going to be on student loans. If you have a student loan, what is the process like of buying a house? So Matt, welcome to our show. I'm excited to have you. Introduce yourself further, please, for those that don't know and I've never spoken to you.
Yeah, well, I'm excited to be here for a couple of reasons. One, I'm excited to educate, but two, I'm excited to be with you. I enjoy our relationship that's grown into a friendship, and I just like how you show up for the people that are in your life, not only friends and family, but the people that you work with, right? Your clients, very thorough, detailed, and so it's just cool to work alongside you. But yeah, as far as who I am, that. Yeah, of course. Yeah. As far as who I am, my name is Matt Labozetta. I am a senior loan officer / sales manager for the branch in Tucson, Arizona. I'm also licensed in Minneapolis and Wisconsin, and can help wherever else in the country that for people who need financing help. I've been in the mortgage business for like 7 years. As far as like accolades and things like that, I'm top 1% in the country. I run a team and I help coach other loan officers across the country as well to help them grow their business and build systems.
One thing that I appreciate working with you is the client service that you have. And I don't want this to sound like pitchy or anything, but like you said, we started working together professionally first, then we became very close friends. You're one of like the most important people in my life. And I've spoken to a bunch of other top agents, real estate agents in their business. And I was just having a conversation earlier this morning with someone who's like the number one agent or close to it in Connecticut. He was like, I bounced from lender to lender. This year I'm working with this person. This year I'm working with another person. And the level of the lack of relationship, like the depth of the relationship between a real estate agent and the lender out there, like that's gotta be tough. I really like how much you pour into your people and everyone that you service, the people on your team. When people work with you, they get customer service. You are like absolutely not a number. So can people buy a house in today's market where it's like the most unaffordable time to be alive right now with student loans?
Yeah, 100%. You definitely can. You definitely can buy a house if you have student loans. That is one of the biggest things I hear. I think people are deterred from wanting to buy a house because they think they have student debt, right? Especially people who like are onto their masters, right? They've been going to some of them 6, 8. I've worked with people who've been in school for 10 years, just depending on, what they're looking to get or what they're getting a degree in, or if they've gone back or whatever it may be. But the answer is yes across all fronts. And it doesn't really matter what type of loan you're doing either. It doesn't matter if you're doing VA, conventional, FHA, right? Those are the three big loan types that are done. The only thing with those is how we have to calculate that debt is different across all programs, right? So VA is the most lenient and is the easiest. They just make VA the easiest. It's probably my favorite loan to do just because of leniency that comes along with it. And so when we go to qualify people, there's something called debt to income ratio, right? So real quick breakdown of what that is on most loan types, they don't want your debt to income ratio to exceed 50%, right? So let's say that your total income was $2,000 a month, right? That would mean that all of your debt and your new proposed housing payment could not be above $1,000 because that exceeds 50% of $2,000, right? So that means if your car payment was, $200 a month, you had a credit card payment that was $100 a month, and then you had student loan payments that were $100 a month, right? That would put us at $500 debt. That would mean that your new proposed housing payment couldn't exceed more than $500 because all the debt that's reported on your credit report is $500, then your new proposed housing payment is $500. Those two things equal $1,000, which is 50% of your $2,000 a month income, right? So that's just a quick breakdown into debt to income ratio. And then where that applies with student loans, like I said, is where is your student loans there's a couple moving pieces, but let's say that you have student loans and you're not having a payment right now, right? Like, let's say that you have $20,000 in student loans. You're wanting to buy a house utilizing a VA loan, right? So let's say that Allie's debt is $20,000, right? Her total overall debt is $20,000. You go 20,000 times 5%, and you would divide that by 12. And the monthly payment that we would have to hit you with for your student loan debt, right, for the $20,000, we would only have to hit you with the $83 a month payment towards that $20,000 balance against your student loans. Does that make sense?
A little. Can you re-explain it?
Yeah. So every calculation is different, right? So VA says that we have to take your balance, right? We have to take your balance of $20,000. We have to multiply it by 5%. Okay. So 20,000 times 5%, divide that by 12. And that's what's going to give us the calculation that we have to hit you with for your DTI every month for your student loan payment.
Got it. What if someone's student debt is closer to $100,000 instead of 20? Or do you see that commonly?
Us seeing $100,000 in student loan debt is like, I've probably seen it maybe 1%, maybe 1%.
Oh, really?
Yeah, it's not a high amount.
If it was $100,000, so it's still the same thing. So times 0.05, which is 5,000, then divided by 12.
Yep.
So $416. Okay.
$416 a month. Now, someone who has debt that's high, right? That's that high in student loan debt is someone that usually like has a master's, right? Or something like that. That's probably a higher earner, right? Where that $416 a month payment isn't as heavy.
Yeah.
Now, the only way we can do that though is if when I pull your credit report and your student loans aren't reporting a payment. That's what's happening most of the time when we pull people's credit. Most of the time, probably I would say 90% of the time, aren't reporting a payment on their student loan debt.
How so?
It just says zero. A couple things. I mean, it could be that they've just gotten out of school, right? So they're not on a payment plan yet, right? They're not on a payment plan yet. A lot of people applied for the forgiveness thing, right? For the whole forgiveness plan. And so a lot of those accounts are still I call them in the matrix because like they're just kind of like floating out there and people aren't having to make a payment on some of them yet, right? Because it's still in lieu. And a lot of times the credit report just doesn't pick up the payment. So there's in some cases that actually works better, to be honest, because sometimes the student loan payment might be higher than the calculation.
So I'm not the most up to speed on the student loan forgiveness. You know, like I literally didn't have student loans because I purposely joined the military to avoid that. That's the reason why I joined the military and I was there for a decade, active duty, to avoid student loans. So therefore, I'm not up to speed with like the forgiveness stuff. I feel like every year there's like a new thing, like, it's going to be forgiven now. It's going to be forgiven. Apply here. I'm sure the audience already knows, like they're probably up to date because those listening to this have student loans or are in the process of getting it. What's the latest? Will student loans be forgiven? And how long of a process is that? So
I believe the last correspondence I heard was that they took that off of the table, that's no longer a thing anymore. However, some people did get their student loans forgiven through the process. I think I had like one client that got their,
and they didn't even have to join the
forgiven.
Military, bro. Good for them.
It's crazy.
Good for them. Oh.
Crazy.
Okay, cool. So then those that have recently maybe, I guess, graduated and they haven't started yet paying, so they're in that sweet spot where they're more apt to qualify, right? Or
I wouldn't say. I mean, there's so much different there's different things, right? It's sometimes the calculation that I do, sometimes it is higher than what they're actually paying a month, and so then there's workarounds for that too. Like, okay, so what happens is if they're on, let's say that their student loans, they're in a deferment plan, right? Their payments are deferred for a certain amount of months. Okay, if they can get me, and depending on what loan we do, every loan is different, right? So depending on what loan, and this is sometimes what makes us go from one loan program to another. Sometimes it might say, hey, you're qualified for VA and conventional, right? But based off of your student loan situation, to get you qualified for a higher amount, we may need to pivot you from one loan type to the different loan type, right? Because of a student loan calculation. Like we've literally done that here to get them more purchasing power. And so Like there's certain low, like on conventional, if your loans are deferred, right, for over 12 months and we can get confirmation, a lot of times we don't have to hit you with the loan payment at all, right? If they're deferred for a certain period of time and they're not going to pay it, we have to get documentation to really prove that. But then we don't have to hit you with the payment. So there's certain workarounds for that. VA is different. VA doesn't have that guidance. Conventional is more lenient on that.
Interesting. What about, I think we've done one physician loan. How does that come to play?
Yeah, physician loans are great because a lot of people that use physician loans are those doctors that are just graduated, right, from medical school. And with the physician loan, we don't count the student loans towards their debt to income ratio at all. So it's completely removed from the debt to income ratio. Yeah. And a lot of times on those physician loans, there's like low down payment, sometimes zero, depending on credit score, right?
What does a credit score have to be? I know that'll be a question.
It's moving all the time. Yeah, it's moving all the time, depending on, I think the last, I can look it up for you while we're here, if that's okay. You want me to look it up to give you the exact?
Yeah, let's do it. Let's do it.
Okay.
Because I know I've had at least 3 people reach out over the course of my being a real estate agent that were looking for a physician loan specifically. I think that would be very beneficial for the people to know. One of them, of course, was an investor, so they used a conventional loan because they weren't planning on owner occupying. But when if he wants to purchase a property to move into owner occupied, this would be a great way for him to do so.
So in order to get 100% financing, which means no down payment, you need at least a 720.
Nice.
Yeah.
Oh man. So
pretty it's a great program if you're someone who just graduated from school and why these are also good too is because they allow for different things like jumbo loans, right? Like in the Arizona market, your loan amount really can't be over $806,000. Well, actually they just changed it. So it's going up to $819,000, right? And so once you get above $819,000 as far as a loan amount is concerned, then you're getting to what's called like a jumbo loan. And so like the debt to income ratio requirements are tighter, the credit score requirements are tighter, the down payment requirements are tighter, the reserves requirement is tighter. All that stuff, if you're using, I know we're veering off from the student loan thing, but if you're using a physician's loan, you can go all the way up to $1 million with no down payment, as long as your credit score is 720.
Wow, that's cool. Okay, that's good to know. So, I have a couple of questions that as you were talking. What about other debt? So say someone has student loan debt, I don't know, for this example, say $50K. They also have a car payment and they have some credit card debt as well. What is the best way for them to prepare to qualify for a house?
Yeah, I think, so when people say one of the biggest thing I hear is the overall, when you're thinking about qualifying for a mortgage, don't think about what the total balance is. Think about what your monthly obligations are towards those balances, right? So we don't really care about if it's $50K. We care more about what are you paying a month? So because it all factors into that debt to income ratio calculation that I did at the beginning of this episode, right? I want to know what you have to pay for every month to make sure that whatever that is, in addition with with the new proposed housing payment, that it essentially doesn't exceed 50%, right? And every loan type is different. Like FHA, we can go above 50 a little bit, right? VA doesn't really care about DTI. They care more about something called residual income. So but really you want to try to keep it at that 50% and under mark. So to kind of answer your question, I would say, because I look at this often too. So we'll say that some people think that, okay, I have a $10,000 credit card, right? And my monthly payment is $100 on that. They're like, I need to pay that $10,000 off, right? But sometimes I see a $3,000 credit card and the monthly payment on the $3,000 credit card is $300. It makes more sense to pay off the $3,000 credit card because now you're freeing up $300 a month and it's less money out of your pocket to do that. you're getting more bang for your buck as opposed to paying off the $10,000, the $10,000 card balance, only getting back $100 a month, as far as your debt to income ratio is concerned. So now as far as like long-term longevity, your financial status, like, like all of that stuff, that's different, right? Because we're not talking about that. Like, I'm not talking about the interest rates on your credit cards and all that. I mean, we dive into that kind of stuff when we're doing cash out refinances and things like that. But just as far as qualifying for a home, look at the cards where your monthly obligation towards that card is the highest, and that's the one we want to get rid of. Does that answer your question?
That makes sense. Yeah, definitely. There was something that I came across Instagram. Somebody posted something about like how a client had paid off a debt, and then therefore I think it was like their credit score took a hit of like 40 points. Now, of course, this could be complete satire. This could be, just clickbait. But have you ever seen that where somebody goes to pay off a debt and then their credit score decreases?
I see when people close an account.
Maybe that was the hit.
When people close an account, that's what happens. But as far as paying, and it depends on what kind of debt it is. Like if it's an installment debt, sometimes I've seen that affect people's credit accounts. But if you're paying off an installment debt, you're essentially closing the account, right?
What's installment debt? Installment
debt is anything that has a term. Right. So like installment debt is like, if you pay this is your payment for X amount of months. Right. So a car loan is installment debt. A mortgage loan is installment debt. A student loan is installment debt. Right. Revolving debt is things that you can continuously spend. Right. Like you pay back, it frees up
like a line of credit.
Line of credit, a credit card, things like that.
Okay. Oh, cool. I didn't know that. Cool. When people with student loans are looking to qualify for a house, how far out should they reach out to you or I to start the process?
And as soon as possible. And the only reason why I say that is because the more information you have up front, the better your path can be. And so even if you don't want to buy for like 10 months, like I get it all the time. People are like, oh, I want to pay this off and I want to pay that off and I want to do this and I want to do that. I'm like, you're doing those things blind, right? Why not have someone who does this for a living and like has helped a ton of people guide you in the right way, right? So like you think you need to pay off the 10,000 card, like I said earlier, right? Maybe you only need to pay off the $2,000 card, right? And maybe that helps your credit score improve significantly, right? Or if I tell you, hey, based off of your income right now, this is what you qualify for, right? But you don't want to buy for 12 months. Okay, so what does the next 12 months look like for you, right? Like, do you have the opportunity to get an increase at your job? Are you up for a job promotion? Are you in a relationship and you might be getting married? So now we're going from a single income household to a dual income household. Do you have the opportunity to pay off some debt? Because if we can pay off some debt now, we qualify for more, right? So like if we get you in early, and maybe you're not ready, we can at least give you the roadmap to what it will look like in order for you to get where you want to be.
No, that makes sense. And so would that require pulling credit at the strategy call and then again later?
Correct. Yeah. But anytime we pull credit, it only affects your score 2 to 3 points. So it's not going to destroy you at all.
Yeah. Everyone's always worried about, I don't want my credit pulled. So yeah.
It's 2 to 3 points. It's 2 to 3 points. So it's not anything substantial.
Yeah. Cool. I liked it. What have we not covered as far as student loans, buying a house?
Yeah. So I think as far as student, like in every loan program is different, right? Like I said, I gave you kind of like the calculation on VA, on FHA. So, and the thing, I wish I could show you credit report, but I can't. But the way that student loans look on credit reports is like, you may have like a $50,000 balance, but they break them down into different accounts. Like it'll show like a trade line of like $10,000 here, $8,000 here, $8,000. You know what I mean? And so it breaks down. But we have to hit you with like on FHA, we have to hit you with the 0.5% of the balance, right? So if like your overall balance is $10,000, we have to hit you with the 0.5% payment for the. Does that make sense?
Yeah.
And conventional, you can do the same thing.
Yeah. Too easy.
Dude, like easy. It's not even like, you see what I mean? Like it makes it easy for, I hope this this helps like take some like fear out of people, or like it debunks the myth of like I have student loans, like I can't qualify, because you definitely can.
Yeah.
And sometimes people try to underwrite themselves or try to pre-approve themselves, right? Which I totally get too. Like I think if I was in that position, I probably would too. But like I advise you, if you're interested, I advise you to speak with a lender. Like even if it's not me, like just have a conversation with someone so you can see what's possible for you, as opposed to just ruling yourself out of the game without even really knowing, you know? And again, not all lenders are created. Yeah, not all lenders are created equal. Like, you know, like we're able to get creative and figure things out for you. It's not like a one-stop shop. And if you are going to speak with a lender, don't speak with like a big bank or a call center or a Rocket Mortgage or whatever, because those people are not loan tacticians. You want to speak with the loan tactician who's going to know and understand what guidelines are and how to work around just some of the harder stuff for you in order to get you to qualify.
For sure. What is the best way for people to get in contact with you? They want you to run their numbers for them to make sure that they qualify.
The best way to get in contact with me is to reach out to Allie first and to make sure you're using her as your real estate agent. And I truly do mean that. And I appreciate that. Somehow if you skip Allie on the way, you can reach out to me. Probably the easiest way, man, is just through a phone call. Like I do answer my phone. I do respond to texts. My phone number is 520-631-6920. I'm old school. I like phone conversations. I want to get to know you. I want to see what your goals are, and I want to see how we can help you.
Yeah, perfect. Thank you, Matt. Actually, for those listening right now, for those catching this after it's been posted on our YouTubes, please comment below what you want to hear from both of us together. This is going to be a new segment, Ask a Lender Anything. If you've ever had any question about how big or small, type it. If you want to reach out to us, we're also on Instagram. For example, if you don't want to place a question publicly, hit us up on the side. We are Allie the Agent on Instagram. And what's your handle, Matt?
MAT_TRIX, Matt Tricks.
Yep. So hit us up and we're more than happy to either do a one-on-one with you, of course, but then also have this question be aired, because if you have a question, chances are someone else has a question. So go ahead and hit subscribe and leave a comment. We respond to all comments, and it's us individually. It's not a VA. It's not a robot. Like, we personally will be answering your questions. We look forward to chatting. See you next time.